Hey everyone, it's Zach Beck. Nearly 1 in 10 Americans are currently jobless, and as a result of that, they're having to rely on unemployment benefits to get through this pandemic. Now, the $2 trillion CARES Act, along with a recent memorandum signed by President Trump, have greatly expanded the amount of and who is eligible to receive unemployment benefits. Now, this unemployment benefit actually comes as a taxable income according to the IRS. Therefore, it is important for you and I to understand what that means for you right now to prevent yourself from having a huge tax liability a year from now. So what I want to do in this video is break down the details, find out what you should be doing in the present to prevent you from having a huge bill in the future. So let's jump into it right now. The first thing for you and I to understand when it comes to this specific issue is that unemployment is not automatically taxed. Now, the IRS considers unemployment taxable income, but it does not automatically deduct that out of the unemployment payment that is issued. So it's actually up to you or myself, if you're receiving an unemployment benefit, to have those taxes deducted. Like other forms of compensation, unemployment benefits are subject to federal taxes, but what you're also going to find is it's going to vary from state to state. For example, specific states do not have taxes on unemployment benefits, such as Alabama, California, Montana, New Jersey, Virginia, and Pennsylvania. Those do not include jobless benefits as taxable income. Other states that don't have a broad income tax generally also don't include taxes as income when it comes to this unemployment benefit. That would be Florida, Alaska, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. I want to be very clear, there is no requirement for you to have taxes withheld from your unemployment benefit right now, but doing so could prevent you from having a large tax bill down the road. So what I want to talk about is how to prepare now to prevent a huge tax liability later. And from that standpoint, it's important for you and I to note that when it comes to actually receiving an unemployment benefit, what you're going to find is that the amount of tax withheld can actually be determined by what happens when you initially sign up. For example, when enrolling, you can actually fill out a form through the IRS called a W-4V form. And this is where you can request to have a certain amount of tax taken out of your unemployment benefit. This actually could be a simple default where you request to have 10% taken out of your unemployment check. Now, when determining whether or not to do this, it's important to note what your current circumstance is. If you're struggling to pay rent, if you're struggling to actually keep food on the table, then maybe taking out that tax right now isn't as essential. Maybe it's better for you to pay the tax hit later on down the road, but it's really depending upon your current circumstance and situation. If you can afford to have the taxes taken out right now, I think that's a better approach to take personally, so that way you're not forced to spend and cough up a lot of money down the line. You can actually go on the IRS's website and they have a withholding calculator where you can put in personal information and determine how much you should actually be having withheld from this unemployment benefit. Now, it's going to vary from person to person, but if you go through that route, it's a good thing for you to check out. I'll put a link in the description for you to actually put your numbers in there and see what works best for you. An alternative that you have is to actually pay your taxes quarterly. So basically every 3 months you could actually pay your taxes. Now, you have to do this, you actually have to calculate your taxes on your own, but the IRS does have a form. It's called a Form 1040-ES, and this allows you to actually go through the process and calculate how much you owe and begin paying it in quarterly installments. Now, this might be a better approach to take if you don't want to have one big lump sum due next April. It is important to note that if you calculate your taxes incorrectly and pay them quarterly, and let's say you underpay the amount of tax owed, you're still going to owe the amount to the IRS. So from that standpoint, be prepared and try and be diligent when you're actually going through the process of calculating your taxes to make sure that you're paying how much you owe, so that way you're not surprised down the road. You might be asking yourself, what about lost wage assistance? Now, this is back in early August, President Trump signed a memorandum where he diverted funds from FEMA into this program to provide an additional $400 weekly benefit to those on unemployment. And this actually was issued to states where the states would have to pick up 25% of the bill. So this could have equaled maybe a $300 benefit depending upon which state you reside in. And according to the Department of Labor, if you're receiving this particular benefit called lost wage assistance, it is still subject to income tax in the same manner that any other income would be. So you really want to be mindful of the fact that if you're paying attention to this, you should be doing the same thing and having your taxes withheld. You do have the option, similar like I referred to previously, to actually have taxes automatically withheld, but you have to coordinate with the state as opposed to the federal government on this particular issue. You might be wondering, how can I lower my tax liability this upcoming year? There's actually the Earned Income Tax Credit, which is something that you could potentially benefit from if you qualify for it. And what this particular benefit is that the Earned Income Tax Credit is intended for low to moderate income individuals, and it can provide you with the ability to receive something between $538 and $6,600 in tax credits, which could ultimately lower your tax liability and bring it down to zero, or potentially bring it to the point where you're actually due a refund. The 2020 income limit for the Earned Income Tax Credit was $15,820 for individuals and $21,710 for joint filers. Now, these thresholds sound low, but increase dramatically if you have dependents or children. These income limits are based on total income, which means you'll also need to add in the unemployment benefits to this to actually consider the threshold, but you also have to have an earned income as part of that as well. I know this might sound a bit confusing, but the IRS actually has an assistant on their website. It's called the EITC Assistant, where you can actually go in there, plug in your numbers, and determine if you were eligible. So I'll put a link in the description for you to check that out. The important thing with the Earned Income Tax Credit is that many people don't know about it, so most people don't even try to actually see if they can qualify for it. So it's something that could be beneficial specifically in this moment. So I'd strongly encourage you taking the time that if you're concerned about your tax liability in 2020, that you consider the Earned Income Tax Credit. Now, the premise of this discussion is that you are on unemployment due to the pandemic, and if that is the case, I am greatly sorry that has happened to you, because really we want to make sure that we're doing everything we can in our lives to be productive citizens that live fulfilling lives that make an impact in this world. So I'm very sorry that you're encountering this right now, but also I want to make sure that you are entitled to receive the benefits you deserve because you paid into the system just like everyone else has. So from that standpoint, eventually you're going to owe taxes. I understand that's frustration, but I want to do everything I can to help you lower your tax liability so you have extra discretionary income to be able to help you achieve your long-term financial goals. And with that being said, I would like to share just some basic financial principles that I'd like to talk about consistently on this channel to make sure that you or I can make sure that we're moving forward financially and helping ourselves achieve our long-term goals. First would be to cut spending wherever you can. Try and scale back your expenditures so that way you're not actually having yourself spending more money on things that you don't really need. On that note, you try and save money. Saving money wherever you can. If that's not going out to eat, if it's trying to scale back maybe some of your subscription services, whatever it is for you where you can find a way to save money, I think it's a great thing. You can also do things such as like calling your credit card company, calling your cable provider, your cell phone provider, and trying to lower your bills, your insurance providers as well. In addition, try to avoid lifestyle inflation. Lifestyle inflation is basically where you or I continue to expand our lifestyle depending upon the amount of income we receive. So we find ourselves then always in this constant cycle of living paycheck to paycheck because we're always maxing out the amount of money we're spending based on the income that we receive. So try and avoid lifestyle inflation at all costs. In addition, try and avoid debt. Now, debt is something that can really cause a lot of trouble and trial in our lives because it basically weighs us down and prevents us from moving forward financially. So try and avoid it if you can. I understand right now if you're in difficult circumstances that this might not be a top priority, but long-term it should be an objective for you to pursue. And I'm not specifically speaking about mortgages, that's something totally different, but just credit card debt, consumer debt, financing a car, financing furniture, financing appliances, things that we really shouldn't be doing. Try and scale back that and cut that down and actually do everything you can to tackle it. And lastly, what I would strongly recommend is once you've hit all of those metrics, do everything that you can to invest your money into strategically placed accounts such as a Roth IRA or a 401k into what I like to do, which are called index funds, which is a broad diversification of stocks that generally perform with about a 5 to 8% return on an annual basis based off of the last 100 years of history in the stock market. So if you're able to do those things, it really positions yourself strongly and strategically so you can move forward and achieve your goals. Because I understand that finances are very interrelated into our entire well-being of our lives. We need to make sure we have them in order so we can prevent stress and anxiety from creeping in. So I'm encouraging you to take the steps necessary right now to move forward on those trajectories. In addition, as it relates to finances, trying to bring in additional income. Obviously, if you're unemployed right now, if you're furloughed or anything is happening, it's very difficult to try and see through this season into what next might be for you. But I have a couple of videos I put together about how to navigate in the job market, trying to pursue different jobs, and what I'll do is I'll put links in the description for you to check those out so you can start navigating and trying to create a strategy right now so you can move forward and actually get the next job that is going to provide you with the income necessary to achieve your lifetime goals. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear it. In addition, if you have any questions, please comment down below. I'd love to interact with you, get to know you, answer any questions for you, do any research on your behalf so you can navigate through this challenging season and come out the other side in a better position than you were before. In addition, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I want to do everything I can to create content that makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I look forward to talking to you next time. Have a great day.